Working Man Investor, today's video: if you're always working for your money, you're never going to become wealthy. The only way to build wealth is to have your money go out and make you more money, and the only way to do that is through investing. The good thing is there's many ways you can put your money to work, and you do not need a lot of money to get started. That's key. A lot of people don't realize that. If you have something as simple as $25 left over at the end of the month, you can start investing that. So the younger you are and the younger you are that you start this, the better. However, if you're 40s and 50s or older, that's okay. At least you've begun to search out knowledge. You've realized you need to do something in order to retire and to build any wealth to leave to your family. So that's the first step. That's the building block. So what you want to do then, the next thing you want to do is you want to start to set goals. You want to set both short-term goals and you want to set long-term goals. Now, the long-term goal, which I'll start with first, is you want to get to the point where your assets are bringing in enough monthly income to cover all your bills and anything and any lifestyle you want. So, unfortunately, this isn't going to happen overnight. There's a lot of gurus on the internet that want to sell you quick ways to do it. There just isn't. It takes a good decade. It is an absolute grind. But if you stick to it and as time goes on, you'll start to see it work. Believe me, I know. I've been there. I'm in the middle of that 10-year grind now, and I'm really starting to see a difference. And I'm just, like my title says, a working man investor. I don't make massive money from my career. I'm fortunate enough to have a very good job, but many of you that are watching this have good jobs, and you might be struggling a little bit more than me. You need to understand, in this economy, after inflation, after the pandemic, the way our deficit is just expanding at $37 trillion, a good job just isn't enough anymore. You need investments that cash flow. You need some type of a side hustle. By a side hustle, it could be like a small business, like my wife enjoys making crafts, making wreaths that you hang on your front door. We've monetized that into a side hustle business. She sells it online. We go to craft shows. It makes extra money that could cover bills every month if we need it to with the profit. It helps. So you want to start looking at ways to expand your money. Even if you have, like I said, even if you have that good job, but you want to look for that side hustle. You want to look for investing, because even a good job sucks nowadays. And I'm sorry, but inflation is going to continue to go higher. I don't know if we're going to be able to get this deficit under control. I think it's going to continue to expand, and this is going to make everything more expensive. So it's important that you learn how to invest. So after you understand the long-term goal is to make enough money to cover, through your investments, to cover your monthly expenses, you want to start setting up short-term goals. So the first thing you want to do, and the very first thing you want to do, is invest in yourself. So again, YouTube, books, real estate investor meetings, just look for regular investor meetups. Look through opportunities through your job. My particular job has a thing called career development. I'm really fortunate to have this. Many of you don't, unfortunately, but it gave actually classes on how to pick individual stocks. It gives you information on investing in real estate, things like that I was able to take for free, which was an advantage for me. So you want to network. You want to talk to your coworkers. You might find a coworker that you're working with that has knowledge that you don't, and that is willing to share with you on investing and the different steps that they take. You want to look for things like that. You want to set a goal. What I did when I first started this is I always wanted what I called the sleep of success. So what does that mean? That simply means that I wanted to, when I woke up in the morning, I wanted to go to bed at night one small step closer to reaching my goals. I could get there by reading a couple chapters in a book, watching a couple of podcasts, networking, going to an investor meeting and networking and meeting people, working on my side hustle, working overtime when available, things like that. Whatever you can do, what sacrifice can you make today that's going to move you forward tomorrow and get you closer to where you want to be? The second step is, if you're in debt, any type of debt, especially bad debt, credit card debt, student loans, I would focus first and foremost on paying that off. You want to eliminate your bad debt. From there, you can begin, that'll start to open up more money at the end of the month to invest. I would follow the snowball method, meaning that you start by focusing on your lowest denominated debt first. So if your lowest debt is a $1,000 credit card bill, focus on paying that off first. Once you pay that off, focus that on your next lowest debt. So if your next debt is $2,000 credit card bill, focus on that. Then you're making the minimum payments roughly to the other payments, and as you're eliminating debt, you're continuing to attack it. That's the best investment that you can make. If you've got a credit card that has a 20% interest rate and you pay that credit card off, that is a 20% return. That beats the market. That beats most investments. That's a good way to go. That's a good way to start. As you're doing this, you're still investing in yourself. You're still studying. And as you wake up in the morning, start telling yourself, as ridiculous as it sounds, I used to tell myself, I am a professional real estate investor. Every morning when I woke up, I didn't say I don't want to go to work today. I said I get to go to work today. Now, again, that was easier for me to say because my expenses were lower and I had a good job. So every time I went to work, I was building wealth, meaning that there was going to be at the end of every month enough money left over if everything was paid to invest. So it's easier to say that. You need to get to that point first, pay off your debt and get to the point where you have something left over at the end of the month. Even if it's a $25 at the end of the month, celebrate that. Be happy. Be proud. That is a step in the right direction. Remember, every single day, take a step forward. Take a step forward. And it compounds. As you do that every day, and if that's your mindset and you've changed your mindset, which is critical, if your mindset is, I'm going to be wealthy, I'm going to have enough money left over. If I lose my job, my family and my kids are not going to starve. I'm going to figure out a way to pay for my kids' college. I'm going to figure out a way. I'm going to set an example to my children of how to invest and how to protect yourself financially. That's what I mean by building wealth. Building wealth to me isn't have a private jet and a bunch of fancy cars and show it off to people and have people be jealous of me. I don't want that. I don't need that. What I want is the financial security for me and my family. I want the financial education to pass along through platforms such as YouTube to you and hopefully have an impact on the world. Wealth can have a great impact. We always hear greedy this and greedy that. It's not the point of wealth. It's important to be wealthy because when you're wealthy, you're in a better position to help others who want to grow themselves. And that's key. You have to want to grow yourself. So I can't help you if you don't want to grow yourself. If you don't want to tackle your financial issues, nothing I can do, nothing anybody else can do. It starts with you. Once you do that, once you have an emergency fund set up to a 6 to 8 month emergency fund, you got your credit card debt paid off, you're making more money, then you could start looking into actual investments. If you only have $25 a month, I'm not giving financial advice. I'm not a financial advisor. I suggest you do your own research and seek out a financial advisor. Do not take the advice off of me, some random guy you just found on YouTube. So this is for entertainment purposes only and informational purposes only, not investment advice. So what I would do if I was in that situation, I only had $25, $50 a month, I would just start a very simple ETF index fund off of like a Vanguard VOO, and I would just put that money in there every month, the first business day of every month, regardless, just put it in there and leave it. Then now that pays dividends too. Every 3 months, it'll pay you some dividends. Set that up so that dividends reinvest in there and that compounds some more. And as you're doing that, you still want to keep building up your income and looking to other investments. Now, there's real estate, rental properties. I'm fortunate enough to have some rental properties. It's not a cheap entry point. That's why I would start with an ETF. If you're sitting on a lump of cash, I would recommend looking into real estate, joining a real estate investors group. Maybe go talk to a real estate agent and they can help you look online. You want to learn your market. You want to try to find somebody that can mentor you in these real estate investment groups. There are people like that. I was able to find one there, and they helped me locate a property I turned my property over to a property manager simply because my time is worth money. Yes, they take 10% of collected rent, but I do not get phone calls at 3 a.m. to come fix anybody's toilet. My property manager has all that, handles all that. So that frees me up to focus on continuing to build wealth. So that's what I would recommend there. And then also there's a thing called, if you don't want to buy rental properties, there's a thing called private money lending. And I'll tell you a story about this. So there was a lady a couple of years ago I bought her rental property from for $150,000. It was in rough shape. She was 62 years old and she's like, I just want to take $10,000 a year out of this to help me stay ahead in retirement. So that gives me 15 years. She goes, so I don't know, I hope I live longer, but I'll worry about that then. So I said, why don't you join this real estate investors group that I go to? There's this thing called private money lending. Have you ever heard of that? She had not. All private money lending is you look for somebody that flips houses, okay? And you look at their track record. You then loan them whatever they need to rehab this house for 10, 12% interest. Loan it to them for 6 months. You go through a title company, and the title company will put a lien on the property for you. So if they don't follow through, you can foreclose on the property and take it. I've got a video on my YouTube channel explaining more detail how to do this. Long story short, she liked that idea. She went to an investors meeting. She met a couple of guys that flip. And what she's been doing with that money is she's been loaning it out for the past couple of years and getting every 6 months paid back plus principal plus interest, which comes to roughly $5,000, $6,000. That has covered the $10,000 that she's wanted to live on, and she hasn't not only not had to touch the principal, she's grown it a few grand every year. So now she's really excited last time I talked to her and happy because now she's thinking she can take this principal down the line and leave that to her kids, her grandkids, or something like that. It really helped her out. As you learn about investing, you'll learn other strategies such as that, and you'll be able to pick the strategies that you like best, that fit your personality and your comfort zone best. But it all starts with investing in yourself, getting out of debt, getting an emergency fund, and just getting started. Even if it's as simple as that $25 an ETF. Once you start doing that, and once you start saying, I'm a professional investor, and you start doing it and building upon it every single day, you'll expand. You'll get more confident. As you get more confident, you'll branch out into other asset classes. As you do that, your wealth will expand. And if you have kids, you're setting an amazing example for those children. They're understanding that money is valuable. They'll be understanding that they don't just need a job to make money, that investments can make them money. You're securing your own kids' future, not by giving them money, but by giving them an education and an example of how to live their lives financially. That, in my opinion, is more important than any college degree you could buy them. Because if you buy them a great college degree and they become a brain surgeon, but they buy 3 yachts and are constantly in debt, they're not wealthy. They just have a lot of stuff. So you want to educate your children. Be another reason for you to do this. And you need to understand that the school system makes employees. They don't make that entrepreneurial investor mindset. So that is what I got for you today. Hope this helps. Working Man Investor, keep grinding, people.